Today, I want to talk about how Citadel's 2022 financial figures have just revealed a massive problem. It proves that Citadel has been taking on heavy losses and is heading for bankruptcy, along with a number of other major banks and giant institutions. So stay tuned and let's make some money. And now I'm going to dive straight in with the key information. So, I want to start with a quick reminder or a quick summary of Citadel's securities sold and not yet purchased since 2015. I want to give you all the lead up on how Citadel has expanded their synthetic short selling operation over the last few years and how each number has ramped up every single year. But then I also want to explain how this year Citadel has actually taken on giant losses and not actually made a profit as many believe. So back in 2015, Citadel had around $6.4 billion in securities sold, not yet purchased. In 2016, that increased by about $1 billion to $7.3 billion. Now in 2017, that took quite the jump from $7.3 billion to around $17.3 billion, a massive increase of around $10 billion. Now in 2018, that jumped by around another $5 billion from $17 billion to $22.3 billion. In 2019, another small increase from $22.3 to $25.2 billion. Now in 2020, those numbers really ramped up from $25.2 billion to $57.5 billion in securities sold and not yet purchased. And obviously last year, or I guess in 2021, that number ramped up once again from $57.5 billion to $65.7 billion in securities sold and not yet purchased. Now, as a quick reminder, these securities sold and not yet purchased are made up of two things. Number one, they're made up of synthetic shares, aka fake shares that have been sold without locating the real underlying share. And number two, it's where shares have been sold to us because retail investors have been buying shares, but Citadel could not locate a share available for sale, or couldn't locate anyone that wanted to sell their share, and has simply issued us an IOU. Now in 2022, that number has actually decreased from $65.7 billion to only $45.7 billion, a drop of around $20 billion. Now you may be saying, Tom, how can that be? How has Citadel actually shorted less synthetic shares this year than they did last year, or less synthetics in 2022 than they did in 2021? But don't worry guys, I do have the answer, and it all ties into how Citadel has actually lost billions. Now to start that answer, we actually need to look up a little higher. We need to look at the securities owned at fair value, aka the total assets that Citadel has in their portfolio. In 2021, Citadel held around $73 billion of total assets or securities in their portfolio, aka $73 billion worth of long positions. Now in 2022, that number has actually decreased massively from $73 billion down to only $57 billion. That means that Citadel have actually lost around $15 billion over the last year, but obviously because in 2022, their long positions actually decreased massively along with the wider market crash. We can also see this line here for their total assets. In 2021, their total assets was $79.1 billion. Now in 2022, only $63 billion. So therefore, I first find it really strange that Citadel can actually report a profit of $16 billion when actually their total assets decreased from $79 billion all the way down to $63 billion. Therefore, I think the first potential answer, as Mike tweeted, is that a lot of people were waiting for this financial statement to see just how bad Citadel synthetic shares had increased. And therefore, as Gavin replied, he said exactly, Citadel have been intentionally cooking the books to give the impression that everything is fine. Maybe Citadel have just transferred a giant portion of their assets and synthetic shares into another likely offshore entity. And that's why they're reporting this $16 billion profit, even though their total assets in Citadel Securities LLC has decreased from $79 billion down to $63 billion. Maybe that total assets number should have actually increased to say $100 billion, and the securities sold not yet purchased should have also increased to say 70, 80 or 90 billion as well, but they've moved a giant portion of their assets and synthetic shares into another offshore entity. Basically intentionally cooking the books to give the impression that everything is fine and that actually guys, look at this, our number of synthetic shares has actually decreased massively, which obviously could potentially be lies if it's just been moved offshore. Now obviously the second answer, as tweeted by Unjuicy, is the fact the value of the AMC and GameStop stocks have dropped. Obviously in 2021, AMC was trading at around $40 to $60 per share, but in 2022, sub $20 per share. basically saying the number of synthetic shares in AMC and GameStop could have likely increased massively, but because the share price has decreased, the total value of their synthetics is less. Having 1 billion synthetic shares at $65 each is a total value of synthetics of $65 billion. But obviously having 4.5 billion synthetic shares, a massive increase, but only $10 per share is still only $45 billion. Therefore, the number of synthetics could have actually increased massively from, say, 1 billion synthetic shares to 4.5 billion synthetics, but because of the reduction in value of the share price, it makes the total value of synthetics seem less. So as I said from this financial statement, it's quite difficult to work out exactly what's gone on. Has Citadel actually lost billions? Did they just move a portion of their assets and synthetic shares into a different company, potentially an offshore company? Or has the value of the stocks obviously just decreased? And obviously the real answer, as tweeted by Mike, is the fact that so many people were waiting for this financial statement that Citadel has obviously pulled some kind of trickery so that we'll never know the true answer. But it does also seem like Citadel has many other problems of their own, such as their investment in Silvergate Capital. As Diamond Hand J tweeted, he said, let's take a look at who's getting absolutely screwed on their Silvergate Capital investment. Obviously this morning, Silvergate is down 45% in the early hours of the market open. Now looking at some of the major owners in Silvergate, we've got BlackRock, State Street, Vanguard, Group 1 Trading, Jane Street, Susquehanna, and of course Citadel themselves. Citadel have a 5% ownership in Silvergate Capital, which is currently down 45% in the early hours of market trading. This is obviously just another knock on Citadel's assets or in Citadel's total long positions, which have obviously decreased massively from the year before. And it seems like Citadel and those aggressive manipulative short sellers have also got other problems coming. As Roger Hamilton tweeted, he said, while the SEC has not sued many Wall Street players for naked shorting directly, they have sued multiple toxic lenders that are associated with naked shorts and the Wall Street fraud. Now, obviously, one of the key ways these manipulative short sellers short and distort companies is by issuing death spiral convertible loans. Now, you may be saying, Tom, what's a death spiral convertible loan and how exactly does it screw many of these smaller companies over? A death spiral convertible loan is where a lender says that guys will lend you, say, $20 million in cash, but in return you have to issue us shares, which will convert into $200 million worth of shares. So it says death spiral debt describes debt financed through the use of certain type of convertible bonds, resulting in an ever-increasing number of shares of common stock, inevitably leading to a steep drop in the price of those shares, and ultimately bankruptcy can result. Therefore, they can give this underlying company, say, $20 million in cash, but over the next, say, few months or the next few years, they receive $200 million worth of shares that they can sell into the open market while shorting that company at the same time. And it says here that recently the SEC has commenced enforcement actions against some of the more well-known toxic convertible loan note lenders, including John Fife and his companies. But obviously it is good news if the SEC is actually taking action against these death spiral convertible loan note funders, and whether many of these funders will actually receive real jail time. And as Nate tweeted, it's also not just Citadel that have been taking on massive losses on their long positions, and has a perfect example. So a few days ago, Tom Hearden tweeted saying that he's 36 years old and that the AMC ape cult may be the single stupidest group that he's ever seen in his game. But yet Tom Hearden's fund, Skylands Capital, decreased in assets from $864 million down to $630 million in 2022, losing around $200 million or 25% of his fund. It looks like Tom Hearden is potentially one of those guys that is indeed shorting and distorting AMC and is likely partaking in the creation of synthetic shares, but obviously it's backfiring massively for him and his fund as he's currently down $200 million for 2022. It wouldn't surprise me if there's many other hedge fund owners that are currently in the same spot that are super angry about AMC and GameStop because their funds have lost massive amounts of money. Now, something else we're also starting to see, crazily enough, is the defaulting of some major banks and giant financial institutions. Frank's Place tweeted, another money market instrument issuer failure. for the overseas Chinese banking corporation. It says here the DTC has received a notification from Deutsche Bank, the issuing or paying agent for Overseas Chinese Banking Corporation Limited, that Deutsche Bank refuses to pay maturity presentments for this issuer's commercial corporate paper that are due and payable through the DTC. Now you may remember this is pretty much the exact same notification we also saw a few weeks back for HSBC International. So it seems like HSBC Bank and also Deutsche Bank are struggling, or at least the banks underneath them are struggling, and that Deutsche Bank and HSBC are refusing to pay their commercial paper payments, which, as I spoke about yesterday, could lead to major bank runs even on these massive major financial institutions. And yes, speaking of which, Gold Telegraph has just tweeted saying breaking news. The German central bank suffered a €1 billion hit from its bond holdings and warned future losses would wipe out its remaining financial buffers. And he added saying that central banks are feeling the heat from their own mistakes. This obviously adds to the Swiss National Bank taking on their largest ever loss since the bank's formation. It basically seems that many of these central banks have taken on massive losses in 2022, and any further losses would likely cripple these central banks. Now this is obviously overall very worrying, and it goes to show that even central banks aren't immune from a stock market crash. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.